Current sentiment toward crypto is absolutely terrible. It's actually even worse than in 2023 after FTX collapse, and I witnessed it firsthand. There is simply no mass adoption of crypto. There are no new users, and people just not buying your crypto bags. But even though we are in crypto winter and bunch of builders switching to AI, I wanted to remind that blockchain is still an amazing tech for finance. Things like permissionless and transparency didn't go anywhere and still hold great value in the future. My name is Zhenya. I'm a crypto investor since 2017 and a founder of Memecoin trading app Aave. In this video, I'll show you 7 coins that still staying strong in this low season and are worth investing. Crypto is still growing, although slow, and now even more with all the institutional interest. Next bull run gonna be massive. It's fair to say now that in 24 and 25, retail skipped that season. Some people got burned on meme coins and never came back. But real world assets and stablecoins wasn't really a narrative for retail. The next bull run will be led by a new narrative that will attract new attention, but coins in this list will pump as well because they are continue building and innovating even in low seasons like now. The first one being, of course, Bitcoin. It's the OG of crypto, and the interest toward it is not going anywhere. Now we have companies buying it and establishing treasuries for the Bitcoin, and also we have individual states in the United States who are establishing their reserves and buying Bitcoin for that. Bitcoin ETFs now became part of the traditional finance, and millions of dollars flow into Bitcoin through those ETFs. Americans can buy Bitcoin with their 401ks and other retirement accounts, and the banks started to recommend Bitcoin as a small percentage for the diversification because it's not correlated to the bonds and stocks. Over the years, we also have a whole industry formed around Bitcoin. Those are mining companies, the companies that invent those hardware for mining, and those mining companies even now publicly tradable on stock exchanges. So if that industry established itself, it's not going anywhere. The beauty of Bitcoin still stays the same. It's a mathematical formula. You have to spend energy in order to mine new blocks. No one can come up and print more Bitcoin like they do with the fiat currencies. We have limited supply, 21 million, and it's truly digital gold. The world now have a consensus that there is some value in it, and it doesn't matter what's backing it or doesn't back. There is a consensus, it's worth money, it's 21 million. There is no founder, so no one can get sued, jailed, steal, or change the formula. And this simplicity is what will continue holding Bitcoin at a very high level, and the price will continue to appreciate. Self-custody. You can have and own your Bitcoin, and you can go anywhere with it. You can store it on a piece of paper, the address of the wallet where you're holding your Bitcoin, and you can travel across border. No one can seize it, take it from you unless they have a court orders and it's was proven that it belongs to you. But otherwise, it's an amazing technology. Corrupt politicians, criminals, they will continue using it, and as long as those guys need to transfer their money, believe me, the value of those money will only increase. Transparency is another quality that can be both good and bad. In case if you are transacting illegal activities, then it's not good because everything can be traced. On the other way, transactions can be audited, organizations can be audited, and this is just a quality that other assets do not possess, which gives another points to Bitcoin and the value in the future. Bitcoin was also battle tested through the years, multiple cycles already, and we just see that Bitcoin itself is not hackable. And even though companies who do stuff in blockchain get scammed, collapse, go bankrupt, the Bitcoin itself stays the same, and no one can change the formula, the supply, and the 4-year halving cycles. We have Mt. Gox, FTX collapses. We had China, Russia, India, Korea banning Bitcoin, then unbanning it. And it's just battle-tested asset. We have a legal clarity now for Bitcoin, as Securities and Exchange Commission in US recognizes it as a commodity, similar to wheat or oil or metals. And it's different from securities or unregistered securities, which is what 99% of all other crypto. We usually have a protocol, a company, and then they issue a token that does something. And if you be buying those tokens, or rather if you will be issuing those tokens as a company, you hope that the price will go up and that determines the token being more of a security because you're hoping to benefit from the activities of that company. Now let's talk about some of the risks that Bitcoin faces. Google recently published papers on quantum risks to Bitcoin. Basically, if the quantum computers are powerful enough, they can use Shor algorithm to derive private keys based on the public keys, because in Bitcoin there is a private and a public keys. And if they know the public key, they can use this algorithm to derive the private key. And once they have both of the keys, they can have control over the wallet. However, the reality is there is no quantum computers yet, and that gives us time, or the developers for Bitcoin and contributors, to make it more secure against quantum risks. And the second one is, of course, Ethereum. Just like Bitcoin, it's proved itself that over the years, this technology is continuing innovating and the value going only to increase. If Bitcoin is blockchain, each block containing transactions, where money went, who owns the money, Ethereum is operating system with smart contracts, and each contract where you can program what money needs to be doing, something that Bitcoin just doesn't possess, and that gives value to Ethereum and continue giving it in the future. If you're finding any value in this analysis and I'm hyping you a little bit for the next crypto season, please press a like for the YouTube algorithm to recommend you more videos like this one. Massive network effects. When we talk about developers working in crypto and developing smart contracts, most likely they're working with EVM, Ethereum Virtual Machine. That's where they develop those contracts. And most of the DeFi, decentralized finance, real world assets, and wallets, they're all based on EVM, or not all, but big chunk of them are EVM based. And we even have the L2s now and other businesses that are built on top of L2s. So that gives massive value to Ethereum, acting as a base layer for all of that additional technology that built on top of it. Ethereum also has utility, as each transaction you need to pay a small amount of ETH for transaction to finalize. Those are gas payments, DeFi, yield, lending, all of that requires small Ethereum transactions, and that gives the utility. And Ethereum can even become deflationary, not inflationary, because each transaction burns some of the fees that are paid in Ethereum. Ethereum has the longest track record of economic security because the whole chain is supported by the validators, and the network of those validators is the biggest amongst all the other layer 1 chains. And as we can see in the last couple of years, when TradFi, traditional finance, want to enter into crypto, they choose Ethereum as their first stop, because when they want to tokenize their assets and issue RWAs, real world assets, or if they want to issue stablecoins, they use EVM because of its security. Lastly, Ethereum as an organization continues to grow and evolve. Vitalik, the autistic leader of that whole organization, continues posting new plans and roadmaps. And which other fiat money or any other assets continues getting new features like your favorite app? None of other assets doing that. Some of the risks that Ethereum continues to face is UX, because Ethereum is still very slow. It's only 12 to 15 seconds for each transaction, and other competitors like Solana or SUI advertise much faster transactions, and by some users they will be seen as better. Weak value capture. Ethereum itself as a token that you're gonna buy, which is separate from Ethereum as an organization or protocol and all the activities that happen in there, the value of Ethereum as a token comes from the demand for the ETH. And the demand comes from those gas fees. Each transaction, you need to have a little bit of ETH. So what happened is layer 2 technology were built, the rollup were built on top of the Ethereum. So they used the security of Ethereum, and those were the benefits. And then they roll up the transactions to make their chains faster. They are L2 built on Ethereum. They are still using the same security, and they're much faster. And the fees that incur on the layer 2, they don't trickle down to layer 1. They don't trickle down to Ethereum. So in a sense, we have these parasites who created their businesses. They are parasitic. They're not parasites. They still created a huge economic value, but they are parasitic in the sense that that value doesn't trickle down to Ethereum itself. The third coin in our list still stays Solana. Solana is a great competitor to Ethereum because it's faster and it has much lower fees, practically zero. And Solana was so fast and useful that it enabled creation of the whole new industry, the Memecoin industry, where we even built our Memecoin trading app Aave. The appearance of Memecoin industry brought a whole new users. That was the positive for the blockchain technology in general, because otherwise those people wouldn't join blockchain, even though they joined as gamblers and degenerates and they were Fortnite players in the past, but they still came in and they bought Solana, they bought Ethereum, they got exposed to the technology. And aside from stable coins and real world assets, meme coins was the biggest narrative in 24-25 cycles. That gambling aspect gave Solana real product market fit. Back in 2023, when FTX collapsed, Sam Bankman-Fried invested in Solana heavily. So when FTX collapsed, Solana collapsed in price as well. But when meme coins started to explode, Solana started to go in price as well, because you need small transactions paid by Solana. So that gave Solana very strong PMF compared to all the other L1s that never found its market fit. Unlike Ethereum that has more of a cypherpunk movement, Solana feels more as a corporate chain because they have a strong foundation that constantly reaches out to projects, what help they need, and they have actual business development unit, and that gives a distinction to Solana versus Ethereum. The risks that Solana faces still stay the same over the years. It's the centralization risk. There are less than 1,000 validators and it's extremely expensive to become one. The other risk is outages, as Solana been down when the transactions are just not happening and the whole network is not responsive. However, they become better at that. And the last one is heavy reliance on speculation and seasonality, because current PMF for Solana is meme coins and gambling on chain. The fourth one is Hype from Hyperliquid, which is a new coin that only came out in the last couple of years. And it has one of the best PMFs in crypto, which is gambling. Lots of people come into crypto to trade, and Hyperliquid, which is a better version of Coinbase and a better version of Binance. And I will try to explain why. Hyperliquid is DEX, decentralized exchange, which is different from Binance or Coinbase that are centralized. And if you own the crypto, they own your keys. On Hyperliquid, you own your own keys and you own crypto. And Hyperliquid has fully on-chain order book. All of the orders are on-chain and verifiable. It gives next level transparency, and there is no room for shady practices that usually happens on Binance, and people go and accuse CZ for scamming people. There were also no VC investors in Hyperliquid. So now when unlocks happens, it's only for foundation and the team, but not the VCs who will be dumping on you during those unlocks. Doxed and reputable team that continues to deliver. And one of the recent ones was HIP3 innovation that allows you to create third-party exchanges on top of Hyperliquid, and tap into the liquidity and security of Hyperliquid. There is no stock or any other tokens issued by Hyperliquid. So if an investor or traditional finance fund wants to participate in the economic growth of Hyperliquid, they must buy Hype token. And the best one is that 97% of trading fees goes into buying back Hype token. Binance didn't have any of those buybacks and still exploded in their value. And Hyperliquid is all of that, plus transparency, plus new technologies that allows people to build on top of them. And they have the 97% buybacks. Risks that Hyperliquid faces: regulatory. In US, they are still not available as they need to register as a broker-dealer with SEC. Centralization concerns. Current validators are tied closely to the founders and early investors into the company, and Jelly Jelly incident shows the lack of decentralization. Hyperliquid's main narrative is perp trading, perpetual contracts, where they allow traders to take 20, 30, 40x leverage on their trades. And essentially it's a casino. So competitors can come up with the better casinos, and that poses risk to Hyperliquid. The fifth token in my list is Aave, which has the second best PMF in crypto aside from gambling, and that is lending and borrowing. When people amass all of their tokens, let's say Bitcoins or Ethereum, what are they going to do with all those coins? And they can go to Aave and just deposit it and lend it out to someone and earn interest on it. It's like the second step that you do after entering crypto. First you acquire some Bitcoin, then you lend it out, and that's the safest strategy. And the best part, it's permissionless, which means no accounts needs to be created, no KYC, know your customer. You don't need to show your ID, your passport, create any accounts. You just show that you have some Bitcoin. Blockchain shows that you have Bitcoin, and you just deposit it to their protocol and lend it out and start making money on top of it. Aave is one of the few protocols that continues to grow its TVL, total value locked, and it's amount of money that people deposited in order to lend out to other users. And even now in this crypto winter, we don't see big drawdowns, and TVL continues to grow. And we don't even need to go too far. Scammers use Aave. Just check my investigation of Trove Markets when they stole $9 million. And what they did, they immediately deposited those money into Aave. It's multi-chain, which allows you to borrow and lend multiple assets, Bitcoin, Ethereum, Solana. They have doxed team working on Aave since 2020, so battle tested. And they even invented flash loans, that is an essential technology now for arbitrage and DeFi strategies. Risks for Aave as an investment. Team and insiders continue to dominate governance. Decentralization basically doesn't exist. Back in December, they voted on the fees to go not to the Aave DAO so that the Aave token holders will benefit, but into their own lab's wallet. And I made a video on that topic, so check it out. The other risk is, as always, regulatory. Aave acts basically as a bank because of lending and borrowing, but of course they don't possess any of the licenses for banking. Weak value capture for the token itself. Aave as a business, as a protocol, might continue to explode as people will borrow and lend more and more on it. But the trading fees and the fees that are generated by the protocol might not necessarily go into the Aave as a token. So you buy the token hoping that you will capture some of that future value. But if the team, like they did in December, and vote however they want, you might not benefit from that explosion of economic activity. And of course, there are always risks of competition. Right now, Morpho, which also on my list, is a better version for lending and borrowing, but it's much newer, so it's less battle tested. This is it for my list for coins that are investments. And now I will show you two more that more of a speculation. And the first one in my speculation list is Pump, the native token for Pump Fun Memecoin Launchpad. Anyone can go and launch their own token. You don't need to be a developer. You don't need to pay big amounts of money to have the initial liquidity. All of it is possible on Pump Fun. And we see that Memecoin narrative is actually much stickier than people thought. It's outlived already the NFT, and people continue launching meme coins based on the memes. The news coming in all the time. Trump might do something or something in the pop culture, and people will create memes on it, and they will create tokens based on those memes. So Pump Fund as a business continues generating profits. It's also very interesting product market fit for crypto in general. It's obviously gambling, but it's not a gambling in traditional sense like Hyperliquid, where you trade and you try to do some technical analysis or some fundamental analysis of projects. Here people gamble on attention tokens. They hope that some meme will be more popular later, so they buy the token for that meme. Pump Fund also one of the few who has very strong buyback program. They were spending up to $1 million to buy Pump token. Team continues to build and innovate, and they are semi-doxed, which means investors saw them in face and they went through the acceleration program in New York. So investors know who they are, but to the public they are unknown. Pump token itself is not as scammy as most of the tokens that are being launched on Pump Fund itself. There is lots of insider trading happens there. If you want to have exposure to a meme coin narrative, you can just buy Pump as a token and not lose your money to some random meme coin. And here's the risks that make me put Pump into the speculation list. The first one is the team has just too much money. They have something over $2 billion in cash, not in some stocks or tokens or equity or some vesting schedule. They have $2 billion in cash on their bank account. They continue innovating and they have new features, but it's just history shows that when you have too much cash, there is just no motivation and drive like there was before. Regulatory, as for all of our tokens in the list, they might still stay in the gray zone for a very long time simply because of the amount of insider trading and just shady practices that happens with all the bundling on the Pump Fund. Meme coins are extractive by their nature, and it's possible that the user base just might cease to exist as all of the money got extracted out of them. Buybacks are not fixed by some algorithm or some rule. It's basically up to the team whether to have them or not to have. And you as a buyer of pump, as an investment, you depend on those buybacks because that's the only reason. You don't need the governance, you don't need any other features. It's not a utility token. So you want those buybacks to continue. And if the team decides to stop those buybacks, your investments might go to zero. Institutions might never buy big sums of pump token because of all of the crime that happens on the platform. And institutions and big traders, whales, are the ones who end up painting the chart and driving it higher and higher. The second token in my speculation list is Morpho. Morpho is lending and borrowing protocol, similar to Aave, just better. And the way they better is they allow creation of your own markets and pairs, unlike Aave where they are preset. Lending and borrowing has very strong PMF in crypto, and Morpho capitalizes on it. We can see it in their TVL chart, total value locked, as more people bringing their money to lock and earn interest on their assets. And the chart shows you that even during this winter season, the chart just continues going up. Morpho was built on top of Aave and Compound, which other lending and borrowing platforms with bigger liquidity. And they are, in a sense, have parasitic relationship just like L2s have to L1s on Ethereum. Risks for Morpho are regulatory, as again, they are borrowing and lending, no banking license. They are more newer and less battle tested. And don't forget that Aave and Compound see what's happening and they can simply improve their UX. And lastly, just like with Aave, it's important to separate the economic activity happening on the protocol versus the token, because you will be buying the token. Why the price for the token is going to increase? And currently there is no big buyback program for Morpho. Aave, Pump, and Morpho, they will 100% explode during the next season. But in their current state, they might not benefit from the growth and activity that happens on their platforms because they don't have that specific value capture or buyback program. In addition to that, there are also unlocks that happen for all of those three coins. And we have foundation, we have early investors, early adopters, contributors. They all been waiting for years, and that's their only liquidity moment when they can finally sell some of their token and get some of the cash back. And for the token holders, aka you, it's never a good thing because it will only paint red candles on the chart. As of today, these crypto tokens prove themselves being nothing but attention token, similar to Memecoins. If there is more attention, if everything going up, the price will be going up. But if we're in a crypto winter, then price collapses. That said, if you're buying Bitcoin, Ethereum, Solana, and Hype, you are investing, and everything else would be more of a speculation because you're just hoping that the seasonality will bring back the value. And you see that there are many tokens that are not on this list, specifically Uni from Uniswap. There is no INA, there is no Aptos and SUI, because the last cycle showed that there is no value in those tokens. The businesses might continue growing, but those were attention tokens, and who knows if they will even continue growing in their price. Let me know if you want a detailed video on the tokens that didn't make my list and why I don't buy them. Until the next video.